Yes, we are live on the FaceTube in the Abo
Good
group.
afternoon from the East Coast.
All right,
What is it for
let me mute that so I don't hear myself talk. But we are
you?
here, and it is
Hello.
another Workshop Wednesday. Today, we're going to be talking about the balance sheet. Ooh.
My favorite topic. Now,
So,
I think we're starting to get glazed over looks because nobody likes or understands the balance sheet. Well, I can't say nobody, but it's not a
especially
popular
on
topic.
tax day, especially on tax day. I mean,
Tax
happy tax
day.
day
Happy
in
tax day.
July.
And you get to talk about the balance sheet. It's really
Man,
exciting.
if we are doing anything with getting people excited about about what we're talking about today, wow. Yeah, tax day and balance sheet. Would you rather do taxes or look at a balance sheet, Carrie? What would you do?
Oh, the balance sheet. I hate taxes. I'm a CPA that hates taxes. Silly me. But I love the balance sheet only because I understand what it is. That's
So what
why.
is what would you say would be the you know, fundamental definition of the balance sheet?
Well, the fundamental definition of a balance sheet is really boring. So let me tell you what I call, what I
What's the
say it
Carrie
does.
definition of the balance sheet?
Yeah. So I'll back myself up to when I first started. I had to get my CPA, I had to get CPA hours under a firm. And one of my first bosses said to me, if you can get the balance sheet accurate, you can trust the P&L. And I'm like, what? Because if you understand every single balance sheet account, then you can trust the P&L. And I mean, he literally had to say it to me 3 times. I'm like, no, I know what a P&L is. Income minus expenses is your net income. Well, that's mission critical for you to pay taxes. So let's say your income statement, I mean your P&L income statement, same thing, another boring title. Your profit and loss is $10,000. So you run out and you pay whatever tax rate, because that's a whole nother complicated world, on $10,000. And a CPA reviews the file. Let's say you're just a bookkeeper and don't understand the whole ins and outs of this, and you're here to learn and understand. And the CPA hands it back to you and says, "Wrong. Their income is $50,000," and you're like, oh, and you look like you've got the deer in the headlights look. And they say to you, "You forgot to record something." And when you untangle, it's like they took the puzzle that you just built and threw it on the floor, and you have to start over. And you realize you had that one piece wrong. So what ended up happening is you did not understand every balance in the balance sheet, and something threw it off. So it may have been something like you bought a truck for $40,000 and you wrote it off. Well, this is one of those years you couldn't write it off. So you needed to take that expense and move it to the balance sheet and do a depreciation entry, which is a whole nother mess. So so how I learned it, I had to go old school. I literally paper to pencil. I grabbed a notebook, and I had to figure this out myself. And I went back to my boss for each account and I said, all right, how do I know the bank account is correct? Because I took the balance sheet he handed to me, he threw it back to me and said they made more money than this, and they're going to be mad if we do their taxes wrong. So I then said, okay, how do I know the bank is right? He goes, you dig in. I said, well, the bank statement says 10,000. And he goes, are there outstanding checks? Yeah, I'm looking at them. Some of them are 4 years old. I'm like, oh, yuck. So you have to handle each item down to the detail, really understand, go one by one by one by one, and understand that outstanding check, you need to handle it. And when do you handle it? Do you want to untangle it all the way back 4 years so you have to redo that tax return? No. So you have to think through each one of these items. And so what is included on your balance sheet are things that they're not like a paper clip. It's going to be a truck. It's not, pack of paper. It's not going to be your dues and subscriptions. It's going to be a big investment of something that if you go to turn around and sell your business, that's what the balance sheet is. It's complicated, but important. Is that a good
I think
short
we,
answer, Dan?
yeah, I think we had a good discussion about it before, where it's really just a snapshot of the health of your business, right? It's like you took a picture of your business on such and such a day, and that's the nice part about the balance sheet is that you can look back and see, that cross section is or an MRI. Take an MRI of your business, and you get to see all the nice neat colors,
Right.
and you can make an assessment of how healthy the business is at such at a moment, at any moment in time, because it is, as the name implies, a rolling balance of those balance sheets. I think we were talking about, it shows the health of a business, right? And you look at it in some ways, and what do you look for? Like, you think of yourself as like a financial personal trainer, right? You're like, okay, I'm gonna
That's
pinch,
your
I'm gonna
BMI.
pinch and poke and things. What would you compare that to, in that case?
So one of the, first thing you start with, get that bank reconciliation accurate, make sure there's no mistakes. So let's say I had a client, this was so bad, and I knew what to do. I fixed it. And I kept getting these emails going, what did you do? What did you do? All of a sudden we're $30,000 lower in our cash balance. They were having mini heart attacks. And I just did my wizardly tricks on it, fixed it. And I'm like, what? I'm thinking, oh no, what did I do? So what happened was they didn't know how to record a deposit, and it was mixed up with several bank accounts, and they duplicated it. So they were overstating their income and overstating their cash. So they could have paid taxes on this extra 30K, but I fixed it. I got rid of it. But what did getting rid of it do? Everything's a debit and a credit. So suddenly the cash went down 30K. Their cushion was gone. They were good with money, but they just didn't understand this. And so I had to slow down instead of just cleaning it up and explain, wait, why did you have this in here twice? Just deleting it didn't help them learn what they did wrong. So it's super important to just, open up the hood. Don't just have a doctor, you walk by or telehealth, oh, you look fine. You need to look at the details and,
You need a blood test. You need
yeah.
you need all sorts of measurements, right?
You can ask questions. So another place you can poke around and find things that I found, I'll go pull a P&L, look at last year, this year, and I'm like, wait a minute, why is office expense so high? They always hide things in office and miscellaneous. That's another place. You go in there or just auto expense, and no, I like subcategories. I'm a little crazy on that. And you find where they purchased a truck or they bought a new computer that's going to last them a couple years. So you can find assets in there that need to come off. They can't write the whole thing off. You want the accountant, tax preparer, to give you that answer. You want to pull those out and put it in the proper account. Even if they write it off, that still means it goes in your fixed assets and you track it with accumulated depreciation. So there's things that you need to do to highlight that and get coded correct. They ultimately might only have the right, that might get written off, but you're throwing it in the wrong account. So it's an important, just think of it as, what kind of a doctor are you going to be? Are you just going to be in charge of the bank reconciliation and make sure that's right? Or are you going to look at that whole balance sheet and help be part of the solution with the business owner, or even if it's your own business? In fact, what do we always say? Make sure your balance sheet's right so you understand it.
Right.
I look at mine at least when I go to do taxes at the year end, and I make sure each one's right. Accounts receivable is another doozy.
And you said something that was really impactful to me the other day, that when if it's top heavy, the assets, you want to have a nice figure, in your in your
Yeah.
balance sheet, right? And just because somebody has a lot of cash in the bank doesn't mean that they owe all that, and it's, it's notes payable or something like that. So you want to make sure that you have a nice hourglass figure on your balance sheet, top heavy, nothing in the middle with the liabilities, and then, nice equity, because then that's now breaking down what you have versus what you owe versus what you own in your
Right.
business, and
Which is
that's
another
going to look
concept,
good.
that the concept of studying cash flow, there's people, I'm not good at that. I'll say that out loud and in public. That's not my specialty. I put the puzzle together, and then I let someone else come in and say, you know what? This is, you should sell, you have too much inventory, or your accounts payable looks too high, or like you said, your cash balance is so high. Why do you have all these credit cards? Why not pay that down and save? So what you want to do, the idea of the balance sheet is to have that picture, so that the person that studies this stuff, which may also be you, nothing wrong with that, it's a nice niche, and especially during these times, understanding what your business is worth is really worthwhile. So be part of the solution to getting that data together, so that you can then make the right decisions, and have a better handle on, why is this accounts receivable sitting here for 4 years? And being careful when you go to correct that in QuickBooks or whatever accounting, who cares what program, we're talking about balance sheet. You want to make sure that you're properly doing it, so you're not you don't want to redo tax returns. That's expensive. Fix it in the year when you determine, oh, that's too old, I'm not going to collect it. Write it off and do it in the proper year, so you're not throwing the train off the tracks from the balance. You don't want to mess up the last year's balance sheet. That's usually my starting point. If you get a brand new client, start with a good balance sheet, whatever they say it is, even if it's wrong, start with that, and then start doing your due diligence and taking that puzzle apart, putting it back together and fixing it in the current year, so you're not causing and wreaking havoc. Unless, I'm not giving tax advice or legal advice here. I'm just saying the easier way to do it is that way. There may be that things were messed up legally and hidden and all that. I'm not talking about that. I'm just talking about minor things that are shifted in the wrong year. It'll ultimately catch up and the tax will all work out. But to do it easier, deal with those issues and clean them up in the current year, I find.
Yeah. What's your philosophy on like closing the books, like with your client, like setting a password or, hands off,
Yeah. So
last year's.
there's a lot of suggestions about that. So it depends on how involved you are. But if you're just doing annual checkups with your client and helping them, being that middleman between the person that's into the details, and then you come in and verify the balances, so it makes it easier for them, the person that's going to do the taxes. That's a really good, I love doing that for my support. You could do it monthly, quarterly, annual is, the bare minimum. Um, and they're willing to pay for it, and you can charge, a good hourly fee for that. But I do, after I've done all that work, I keep copies of everything in a file so that I know where I left off, and then I password protect it, because it's real easy to roll and have that, to make a mistake. And if anything, there's two ways that it can happen. You can password protect it so they don't have the code. Now they might get mad at that. Or you can password protect it so that the person, that somebody, you give one person the code that you trust, that knows to text you and tell you what they're doing. Or a password they all have, where it literally says, hey, you're about to change something in a prior period, is that okay? And then they key it in. But make sure you have it real clear that if you untangle my hard work, you're going to pay for me to fix it.
Well, the best practice that I heard was that you set the password as $500, because
I've
that's
heard
what it's
that.
gonna because that's what it's gonna cost them for you to fix their mess. But the nice part about QuickBooks, when you do put in a closing date, especially if you're using the accountant's edition with desktop and you do the client data review, that kind of puts a line in the sand, so that when you get that file back again and review it, if they've made some changes to that close period, or after you've even you don't even have to put the closing date on it, but you're just reviewing it again, you'll be able to see what they changed. You can click on it and it'll bring it up, and just, there you can see what did they do, to take a lot of the guesswork out of what you need to find, changes in their close period. Also, with online has a report for accountants, changes after close period, so you can just again see those transactions. What did they do, and maybe they were legitimate changes and they should have been.
And
But the police work of trying to hunt down the usual suspects, those two tools actually help out a lot when you're
audit trail.
when you
Audit
get
trail
that
helps
information.
out a lot, especially in desktop. And one of the things to make you aware of that I found out the hard way. A lot of times in desktop, people like to log in as the admin and do everything under admin. That tells you nothing. So best practices is to say it's fine to have your admin, but let's go ahead and set you up as a login. I set myself up. So, if I ever have to touch their file, I log in as myself, because the finger pointing starts on day one. So make sure that when you do pull the audit trail, I can see that Dan did it and he can see that I did it. And he'll do that. He'll shake his head, I didn't do it. But
I
you
don't
can
know
see
what you're talking
right
about.
here. And it might be Dan changed it and then Carrie changed it and then Dan changed it back. And then we can have a real conversation about, you have the date and the time, and you might not be able to remember it if you don't time travel fast enough on that. But the logins are real important. And a lot of people, when it's just a one person login, they get lazy and they don't realize admin, you should not be doing, admin tells you nothing. Admin should be reserved for those weird, have to be in single user mode, or set up an item code or change a mapping, but you don't want just anybody in admin.
Right.
And another thing that I thought of when you were talking too was that there is a need for people that like, and I know I have quiz people. And if anybody's listening to this, do you love doing file cleanup? I don't have time, but I love it. So basically you're already doing this, but just make sure you're going down the balance sheet. So when someone hands you a file and says, what do I need to do to fix it? These are the kind of things you can do the same service and charge for it. If you want to just say, charge you $500 to review your file and then give a report, and you don't give them the whole answers. You can say, it looks like, you can say, I reviewed. You could just take their balance sheet and I see some things wrong. And, just do an overview, not necessarily, maybe look under the hood, but don't take the engine out and don't fix it for them unless you're covering for your time. I was
I have
finding
that problem.
ready to fix.
Like, I just want to fix it and be done with it. And
Yeah, don't do
then
that.
it's too late.
It's too, yeah. In fact, you're not really training them on the bad workflow and behavior. So, try really sit on your hands, although it's hard to type and keep notes on what's wrong. But, create your own report. And then as you're digging in, you can give them, this is what I found wrong. You can do it as a health report. I've seen a lot of people get really creative, like good, green, yellow, red. There's a lot of ways you can create your own template and give them a report. Your bank account looks fantastic, everything matched, that kind of thing. But your accounts receivable needs some review, that kind of thing. And there's a real big need for this. And it doesn't matter what version of QuickBooks they're going to end up in. It can be part of, before you come on as a customer, this is what we need to really, before you, I just joined a new doctor's office and they're like, we need you to do a full physical. Same kind of thing, right? Because you don't know what you're getting into. You might not even want them as a client.
Right.
Yeah.
I mean, or when you go to a new gym and they put you through, the half-hour workout, and then the next day you're like, I'm not going back there again. That hurts.
You might not be ready for the cleanup. You might not be ready for your hourglass figure. You need a little more time on, and not every client's ready for this. So don't force it. Just go to the
Yeah.
next one. There's plenty that want help, and there's
Now,
enough that think they're wrong.
you wrote a really nice blog about this file checkup. I just posted it in the comments so people can go check it out. Now, for school bookkeeping, we want to take and revamp a lot of these courses that we have in here. But as far as the balance sheet is concerned, we're going to take it and do like beginning, intermediate, and advanced stuff with the balance sheet. So we just launched a brand new course. We call it the Mr. Rogers version of the balance sheet. Understanding your balance sheet. Very simple. Can you say asset? I knew you could. Now we're going to the land of make believe. The next step. So that's really what we're doing in school of bookkeeping. You're currently working on setting up your balance sheet. So that's now now you've got that fundamental foundation of what the balance sheet is, and then you get to walk them through how to set it up properly. But then we don't always get those. We're not always what's the word I'm looking for? We're not always we don't have the luxury. There we go. Don't have the luxury of starting up a brand new file from scratch, and setting it up the right way. So that's where we're going to be taking these courses. Is like, okay, well, here's the mess. How do I fix the mess? So look for those courses in School of Bookkeeping. Any closing thoughts that you have, Carrie, for this week's workshop?
Well, I wanted to also follow up with what you're talking about with what we have released. So it's understanding your balance sheet. And you may already know, I know everything about bank accounts. That's my focus, but you might not really, understand the fundamentals of some of the other ones like fixed assets and so forth. So Dan has designed our new look and feel to be short videos, 2 to 3 minutes. Short. Sometimes I might get a little chatty, but he reins it in. And it's really designed so that you can pick and choose. You're basically customizing what you need. Let's say you took accounting and you missed the whole part about liabilities, and you don't like liabilities and you just need to pound it in your head. We're just going over what to know, what you need to know about items that could appear on your balance sheet. And the good thing about that is you may see them fall in the income statement and you need to get them out. So the customer is paying the right taxes. You don't want them to get mad.
We had somebody come in yesterday and they had duplicated their the bank accounts, and they ended up making their income accounts a bank account. So it showed up as a negative when they were making their deposits. So easy fix, just to make the account the right type of account, and voila. But if you didn't have the understanding of where that should have appeared on the balance sheet or where to expect it to appear, then there's a lot of questions or confusion around that. It's like, well, I entered the transaction, it's the beauty of double entry accounting. There is no, it's Isaac Newton's, it's every action has an equal and opposite reaction. It's just debits and credits.
And the beauty of QuickBooks is it does so much for you. Sometimes people that have done it, in other programs can get frustrated. So you have to really understand the balance sheet and how it should look to know if you did that entry right. And if you didn't, flip it back. I mean, that's my favorite part. I know it should be $200. Why is it negative? Oh, every action has a reaction.
There you go.
I hope you're excited about balance sheets.
Way better than taxes.
Seriously, I would rather talk balance sheets and taxes any day.
Well, I am talking balance sheet instead of doing my taxes. I still have to submit or file them today.
I'm done. Check and check. Got them all done.
But we had a couple of people on our Facebook Live. Mary said, "I'm so glad you're doing this. I can never get my head around the balance sheet." And Linda is, "This is excellent. Thank you." So awesome. Thanks for joining us today on another Workshop Wednesday. Next week, what are we doing next week? We're going to be talking about what to consider when you're quoting a job. Pricing.
Well,
Pricing stuff, stuff for your
we just
practice.
gave you a clue. This is one of them.
Yeah.
Don't forget.
Well, put a closing date and call it $500.
That's right. All right. Well, we'll
All right.
wrap this Wednesday workshop up. Check us out. Check out our course on School of Bookkeeping. We give you 30 days free so you can take a peek and know that we've got some exciting things coming we're working on this summer. So check it out. Give us some feedback.
Right.
We appreciate it.
All right. Thanks. Have a great day, and we'll see you next week.